Welcome, traders. So basically, I'm away on holiday. The bandwidth is incredibly tight. So this week, I'm going to break routine and just do a very quick recording. I think it's worthwhile doing, but no bells or whistles, just a raw market analysis. Okay, so please bear with me. Now, first of all, starting off here with volatility index, I would be amazed if it hadn't moved up, and it has here. You can see that it's moved a little bit higher on the daily, but again, nothing massive, but it's testing resistance here. When we look at it in context, it's still in the lows, but it is pushing a little bit higher. So again, a lot of people tend to expect the sky should be falling. There's no signs of that here. And again, I don't think things really count until we see significant spikes build up over time, as we have with COVID, as we have with everything else in history. So I think I want to see that before I start to panic. All right, looking here at the dollar index. So we had a strong day on Friday, Thursday and Friday. We had a bit of a pushback. And so the thing is, I still think we're overextended. We've still been failing in this area, but it's similar to what we saw. It's had such a strong move, it could really take a while to fail here. So it's actually set up here with a bullish continuation candle. However, in my opinion, we are still very much overdue for a correction. To be fair, the continuation candle means that it could continue up from here, but I want to see how this next week responds. We could see it push a little bit further and then collapse and then see a continuation. So if we see further failures such as these, then my expectation is we'll see a bigger correction when the time comes. The monthly in isolation looks like a continuation. So to me, this feels as though actually there's nothing that should really stop it from continuing up in isolation. Only problem is that when you look at it on a weekly basis, it's insane. It just really does need to have that correction. So that is the conflict here. We're seeing, nothing here that shouldn't say, okay, I've had a bit of a correction, we can carry on. And if we do, there's potentially nothing really stopping it from going up to 108 here, if that's going to be the case. You can see it double bottomed. So if you have a look at it here, I'm just going to adjust this scooch. If we do that, that's a double bottom, and so that also is potentially a continuation. Some hidden divergence. There's a lot of stuff here that is hinting at leaning towards a continuation, even though it's ridiculously overextended. So that's going to make it tricky. It means this week be extra cautious, because there really is a good chance of it doing anything here. So I spoke about this last week. I said, look, we could see something whereby price potentially comes down, hits a lower low, and then we get bullish divergence, which we do have. Well, no, we don't really have that at here, and then we see a bigger correction. So it really is going to be choppy. I would expect there's no clear direction at this point in time. Okay, we should have had a deeper correction. We didn't. We had a double top, which means we could see a continuation to the downtrend. Then we could see a reversal. We're still overextended. So all of these can be true at the same time. Looking at sterling, it's almost identical to euros. The only difference is it did come up and break this previous high, which means it qualified as a weekly retracement at, if nothing else. It's also got some potential move down to 1.2 or a little bit further down towards here. So there is a fair chance we could see the market move down to that and then have a rejection. To me, that is a very normal thing that you can see happen on every single time frame. I'm just mapping that out as a possibility here. If we have a look, for example, at Aussie dollar. So I spoke about Aussie and Kiwi dollars being quite strong, but even here you can see it pushed all the way back down. It looks very much, in this case, it looks as though it came right through support and actually wants to continue down to the next level. So this looks much more likely to continue down, even though we have some strong bullish divergence here. So it's just very conflicting signals, which makes sense when you kind of, unless you've been living under a rock, you know what I mean, or just living in a cave these days. I just mean as in not having access to social media. I don't mean anything disparaging. I just mean as in living outside of access to social media. You would know there's been a lot going on the planet. Kiwi still pushing down, but again, that's a very bearish candle closing right near the lows. So that was a strong, no doubt, a seriously strong pushback by the dollar. And it's interesting because it didn't impact everyone. Looking at dollar yen, it's still faltering near the highs. So I maintain my analysis of dollar yen here. It's not on its own, is not strong, or at least we're not seeing. I don't expect too much of those continuations. Let me have a very quick look at the yen cross. Just quickly running through the yen crosses to see. So the yen itself is not a driving factor here. Euro yen. Pound yen, not showing much strength here. You look at the weekly, no clear direction. Let's look at Aussie yen. Yeah, there's nothing happening here. I mean, I don't actually have to go any further. There's more than enough information here to show that the yen itself is not driving it. The dollar is kind of pretty much in charge at this point, or at least just that the yen is just not doing anything. Okay, so there's nothing to take advantage there, because your highest probability, safest trades come from when you trade the weakest against the strongest, and you want both parties actively having chosen a direction. We don't have that in that particular case. Dollar Swissy, let's have a look at this. So dollar Swissy having done a bit of a retracement here. That's almost a bit of a double top. Again, I would have expected a deeper retracement down to 8,930. And we'll see if that's going to be the case. That's, again, also implies, look at this. So we had a bit of a U-turn here. at a bit of a level here as well, so potential level support resistance, and then we have a U-turn here. So a lot of this, again, hinting at, certainly at the intention to head lower. Okay, dollar CAD, I suppose, if we were going to have a look at this. No, just going to stay where it is for now. It's definitely turning around, so dollar CAD is starting to head higher, but there's just general battles in this price area anyway, so it's not super strong. Gold, wow, holy cow, what a move on gold. So I removed the little green patch that I have over here, the little green box where I was expecting a turnaround, and we got the turnaround. Okay, we got the turnaround. It's a good area for it. This is a higher low. I think at this point, it's very reasonable to expect gold to attempt to push its way back up to the old high. So I've been waiting for it for a while, and it just kept dripping and dripping and dripping, and then dropped below that, and then turned around. But there you go, we've got it. Silver as well. So gold is absolutely would be on my watch list. I'm on holiday, but it would be on my watch list for looking for buys to the upside. And just going back to that, what I would really like to see is a retest of 1900. So this is a massive daily candle. It's probably tired. It's probably going to go sideways for a bit. But any kind of pullbacks to 1900, anything in this area should be a solid buy opportunity. Should I mark that? Should I mark it? Let's mark the area. So anything in this area should, to my mind, represent a ridiculously good buying opportunity. Not a guarantee. We never get guarantees, but a good one. Silver, I was having a quick look at silver. Let's have another look at that. That's good. Really, really good. Pullbacks should represent buying opportunities. Does have a downtrend on the weekly. But looking at the monthly, I think it's likely we're going to see it push on. So this is where it gets really interesting, because the dollar should have kicked this, guys, should have knocked it down. It didn't, which tells you gold is independently, metals are or let's put it this way, commodities are independently strong. Let's check out natural gas as a comparison. So natural gas back into this uptrend. I didn't look at it last week, but this is trying to work its way up. So I've been talking about this for a while. It's been bottoming out, then it went sideways. So it had reversal signs here, then it lost them. Now it's back up into that. So I'm not going to go and say, oh, well, this is a continuation of the reversal signs here. No, these were signs that it was definitely wanting to try and turn around, that it lost those signs. Now it's managed to turn around. So that's good. Brand new uptrend there. It's got to break free of this, and we'll see. We have crude oils. So crude oils, beautiful, have set up to go long. So we could see here. I mean, it's always annoying with crude oils because there's always an implication that our fuel prices are going to rise as well. But if you see it purely as a money-making opportunity, there's a really good positive setup. Okay, so it's certainly going to try. I did say last week that this was a big knock, and if it broke the low here, it was going to have a bigger correction. It needed to turn around exactly where it was, which it actually did. And I wasn't really expecting that. I was kind of like 60-40. I thought it was more likely to come back down towards these lows, but it did actually turn around. So it's a good example of why you want to map out, what are the different ways in which this could play out so that you have a plan for both. Inside, bullish candle closing near the highs. This is a strong bullish signal. Okay, so Brent crude and crude oils and gold. So commodities so far, it would appear, are looking quite bullish. Let's check sugar out. So sugar managed to continue on. Yeah, it's looking all right. So it looks as though commodities in general now, I'm not going to talk about the geopolitics of it. I'm not qualified to go into great details about those things. I can comment on them and observe them, and I have experience in those areas. But for now, I'm going to just wait and see what kind of all the different things that are going on in the world today. It does seem like it's sort of close to boiling point. So let's just kind of hope everything turns out for the best for everyone. Okay, so let's have a look at the global indices. So yeah, we had a good week, in my opinion. We broke the previous highs. We didn't finish as strong as I wanted. Okay, so we could see here with testing off support. Again, a green candle is what I want to see. We are just halfway through the month. Okay, we're halfway through the month. I want to see that push on. S&P as well. It's broken these previous highs, coming back down. If we get a nice bullish candle this week and close higher the coming week, then we're good. And if we close above this weekly candle, the high of the weekly candle, then we are very, very good. It's not guaranteed, but it is a possibility. Okay. Again, we had nice little rejection and a failure here. So we're going through effectively range-bound sellers, bears and bulls fighting it out. Again, any pushes and closes above the high of this last week's candle would, to me, be very good signals. Okay. Another failure just means the battle's ongoing. And obviously a heavy close near the lows means the bears are winning. So those are your kind of outcomes there. Russell back down near the bottom of the range. I was wanting to see a bit of a rejection, but we're not out of the range yet. So you've got to give it every single opportunity to see how it responds in the range. The FTSE index, actually not bad. Again, it's actually set up relatively nicely in this area. And so to me, it looks as though we could get a bullish setup this week. We could even come back down, bullish candle, and continue up. We've got the German DAX tried and failed. So this actually looks more like a break and a retest and a rejection. So this in isolation looks bearish, as though it's going to continue down. That's interesting to me. So this implies we're going to continue down, especially if we break the low of last week. But if we don't, and we do manage to close higher, what does that tell you? That tells you it's a very strong recovery, because actually it's gone against the most likely outcome there. Okay, again, we've got a bullish candle forming here with the Australian ASX, so there's some good chance there. We've broken some previous highs on the daily. They look good, and I'm just going to move this along here so we can include that. This is a good area for this to turn around. This is the Nikkei, and it looks as though it's done a swing low with a bullish candle, and that looks nice and bullish, so that looks great. So not all doom and gloom. Ladies and gents, let's run through these very, very quickly. Apple, small bullish candle on the monthly so far, looking good. Just got to break this downward sloping trend line. If it does, that's additional confirmation that it's getting stronger. Amazon is holding in this area. Bullish close near the highs would have been better. AT&T is looking more bearish, but it's actually range bound. It's ping-ponging in this range. Let me please identify that range for you. There we go. So let's see what that's going to do. Let's go to ARK. ARK looks very similar to, what was it, the DAX, I beg your pardon. Looks like it wants to continue down. So although I had highlighted that as a bullish candle, I'm going to leave this here for now. I'm going to leave it here for now, but it's still within this range. It still looks as though it's potentially struggling. Glencore looks fine, inside bullish candle. It's not a strong trend, but it's not terrible. We can see Tesco pushed up but failed at resistance, but that monthly candle looks fantastic so far. Amex, a little bit of a bullish candle forming here in a swing low, so that still could go higher. Berkshire Hathaway looks fine. A little bit of a bullish indecision or spinning top here. Good. Could be a turning point, and it's an inside candle. So a couple of reasons why that could be a turning point. Also, a doji here on Coca-Cola could be a turning point. Let's just see how that goes. Beautiful BP, fantastic week, obviously, because of crude oil. Exxon is, well, actually not doing as well. It's interesting. Over the last year, I've seen Exxon do better where BP hadn't, and this time BP was the kind of winner this week. Let's get rid of this. You don't need this anymore. The less clutter you have on your charts, the better. So clean it up as you go. Here, pushing and closing near the lows. So General Motors hinting at going down. So let's just say it. General Motors, look, it's right on a cliff edge here, but it's looking like it's going to go lower. So General Motors not in good condition. JP Morgan trying and failing, but not failing completely. Let's just see. I mean, this is a bit of a rejection here, but let's just see how the next week goes. This kind of implies we could see price back down to this area. So if it does manage to close high, that's a really good sign. Adidas just battling in this area, but still looking good to me. Meta trying and failing. As I said, it's very, we need a correction down to 245 based off this. This is similar, but let's see how the next week goes. Bearish divergence and a failure. So, okay, I think it's fair to say that it's not unreasonable to expect Meta to go sideways and then down here, or to go down. Morgan Stanley breaking lower, definitely out of the range and heading lower. Okay, so let's get rid of that. Trying to turn around where it is now, but it's heading down to the next level of support. Nvidia doing okay. That looks like a head and shoulders for me, don't you think? Don't you think that's a little bit of a head and shoulders type of pattern forming potentially? I mean, it looks like it there, but actually now we could see that, especially if we break below that low. And again, we still need this to come down. I stand by that. So that's in Meta. I stand by a bigger correction. Netflix breaking lower, also not looking good. That doesn't look very, very strong. PayPal also heading down. We've got Spotify range bound. So you know what could change all of this? We might get a rate cut. I was kind of the opinion that the Fed wouldn't give rate cuts if they really, really, really didn't have to. I don't think there'll be any more rate hikes, or I don't think so. I think it's a bad idea at this point. I think we needed it, and I think we've done enough now. We might actually have to get a rate cut, so let's see how that goes. Spotify. So we might get a rate hike, and that would be a good boost. Spider heading lower. What did I say for Spotify? Spotify just range bound, but not looking strong. So the only thing I think it would be a clear thing that would help this would be a rate cut. And I haven't mentioned that before because it didn't occur to me before. But actually now that I realize, usually your first rate cut, there's actually a post I did on Twitter which says the average rate cut, and it's an average, was about 7 months from the first rate hike, something like that. So or from the last rate hike, I beg your pardon. So we might get a rate cut, who knows? But certainly we will in the next 6 months. I'm pretty sure that we'll see. We've broken down through this. Okay, so FedEx now looking more bearish than bullish. All that actually really says to me is it's a monthly retracement. That's all it really is at this time. Double top, bearish divergence. This is coming down to 232. So interesting. When I look at individual stuff here, I see bearish setup. Okay, we've got Tesla here not looking as strong this week. And we've got Vanguard. Okay, downtrend. We'll see how that goes. That monthly looks fine. That looks good so far, but we're only halfway through the month. And we've got Walt Disney, which still to me looks good. Okay, it hasn't succeeded yet, but there's a lot of bullish signs here. So it's very similar to what I spoke about with natural gas. I'm expecting Walt Disney, so far I'm expected to bottom out here in general. Bonds should see if there's a bit of a spike. So nice double bottom here, nice rejections there. We could see a bit of a change here. We'll see nothing yet. Just part of a normal retracement, part of its normal retracement in its downtrend, but we are seeing a move higher. So let's see if this becomes the bottom. I'm not seeing any bullish divergence. I'm not seeing much of that. So we'll see how that goes. And very quickly, cryptos are not looking super strong when I saw here. They're still stuck in a range. We've got a lower high. Doesn't look good. We've got Ethereum pushing near the lows. Solana, I beg your pardon, still in that range. We've got Cardano setting up for actually a bearish breakout. Very interesting. So that's got the pressure I spoke about. Binance last week also looking as though they're going to push a little bit lower. Okay, so very quickly to recap, I apologize for the no bells and whistles version. I hope you still find this instructive and useful. So to recap, here's the thing. We definitely are in a period where the market is in a little bit of a fork. I'm seeing not a universal signal across the board. I'm seeing a little bit of fear. I'm seeing the equities themselves looking, a lot of them looking still bearish, which doesn't look great for bulls such as myself, but the indices are also showing some potential to turn around. I stand by my assessment that dollar might still push on, but it should be in the final lap of whatever move it's doing before we do get a decent correction. And I'm just inserting onto the table one possible option might be something such as that. But it makes sense that last year we had Russia's invasion over Ukraine. We saw that stronger dollar, and here this year we're also seeing not just the fans of the bonds, but also, by the way, obviously war is now it's sort of much more on the table, and therefore this might make the dollar a safe haven currency. So again, there's something going on. We are in unusual times, and therefore I would be prepared. I'd be prepared logically for this dollar to keep going in a way like it did last year. But this, if it is going to turn around, these are the signs of that. Please trade sensibly, manage your risk appropriately, stay optimistic for the bulls on the markets. Let's see how that goes. Let's keep an eye on the indices. They will give us a better picture than the individual equities. And commodities are offering some good opportunities as well. I'll leave you with that. Thanks, ladies and gents. Have a great week. All right, keep calm and carry on trading.